blessed Sunday, Michael Saylor sycophants. Hope everyone's having a great day, enjoying the sun. We're going to look at Curve Finance today. This was one of the top 3 protocols for DeFi last cycle. It's actually fallen out of favor lately. So you'll see here on DeFi Llama the top 20 DeFi protocols. Lido's now king of the jungle. Eigenlayer is a fairly new one at 12 billion TVL. Aave's always been top 3. They have institutional section of their protocol where institutions can plug in direct and invest in DeFi. So this is always going to be top 3 in my opinion. Makers jumped in quite a bit. They're at 7 billion. And you'll see down here, Curve is at 2 billion. At their peak right here before the MIM DPEG, so this is going to show all the Black Swan events in each protocol that might have driven price down or any exploits. You'll see it was at 25 billion at its peak, so 12x what it is today. And the thing about Curve DAO, if you give me a moment, I'll just jump back into the main page. You'll see here under TVL, under their name right here, you'll see how many chains are linked to the protocol. So if someone's looking for a diversity of DeFi yield protocols, there's 17 chains, which is right at the top with Uniswap at 22. So it's one of those protocols that's been around for a while. It's battle tested through deep bear markets. I don't think it's going anywhere. I think at this moment they have enough partnerships with enough different protocols where people are going to stick with it. A lot of what has happened to it to cause price to get completely destroyed from the highs is there's been quite a few exploits and major players getting liquidated on the way down. The last one I think was like a $40 million liquidation that kind of created the low, in my opinion. In this range, you'll see on the weekly the awesome oscillator showing a couple of drives of Class A bullish divergence where price is going down, but the oscillator is showing relative strength diminishing of the sell pressure. RSI is kind of flattening out, but it's still bearish convergence here. But you'll see the second drive down is pretty shallow. So I'd imagine your next weekly drive is going to be a higher low. And if we get that higher low on the weekly, but we have a slightly lower low, let's say, then that would be turbo bullish in my opinion. I don't think we're going to get that lower low on the weekly. I honestly believe this is the low. The reason is you could see this volume blowout candle. If you zoom in and then zoom out, you'll see this is a 5 standard deviation spike in volume, right? So even here, this would have been a 1 standard deviation spike, 2, and then up here you have basically like a 5 standard deviation volume blowout. So that's usually going to define the low when there is a capitulation. And the way I treat these relative volume candles here is if the following candle is an outlier bullish or like buying candle, which here you can see it's a 3 standard deviation positive volume candle, that usually is indicative of a bottom, in my opinion. I mean, it's anecdotal. Obviously, I haven't back tested it as thoroughly as, fund or quant, but just from observing price action, that's usually what you see at the lows. So overall, it looks, in terms of the relative strength of the move down, I think it's diminishing. Also, you have a few patterns to pay attention to. You have a falling wedge, kind of like that, 1 deviation, but we're basically flirting with a potential breakout soon. So I'm watching that. Also, this was in a deep accumulation pattern here. So if you map out the time frame from the low to the manipulation, that was 756 days, so a year and a half in downward accumulation within that wedge. What I like about this setup is from here to here, you basically have a really clean liquidity arc. And if you look at the link breakout, when it was in a similar deep accumulation, it had the exact same posture. So if we go to the link chart on the weekly, I've highlighted this for all the servers previously too. You could see same type of, each wick is lower than the previous one. Even this one right here is higher than this one, meaning each wick lower is open liquidity to fuel the move up. And if you zoom out, I had this charted, but I guess I erased it. It has the exact same accumulation with a manipulation below the low. That's your manipulation in the power of 3. And then you have your distribution where it basically reprices back into a major imbalance zone right there. So that has a very similar setup on Curve, and it's something I'm watching. I believe right now we're in the manipulation phase, and to confirm it, you're going to wait for a reclaim of the external low right here, this structure that was developed 1, 2, 3, 4, and all these internal wicks on the weekly. When that's reclaimed, you're going to have a nice clean weekly setup to run it up to these highs, which on the daily are going to be open wicks. So right there, you're going to have some very nice liquidity to target on the way up. So this is your weekly profile, and if we go into the range, we'll go into a little bit more granular detail. So at the lows, I was waiting for a 3 tap, which I know RecProof on X talks about this, and basically you get a drive down, another drive down, build some more liquidity here, drive 3, and then run it back. So I'm watching that setup at the lows as well. In the manipulation zone, you'll see there's a liquidity arc we talked about over here, and basically this is your demand line on the way down. It seems to be respecting it, so I truly believe this is the final low. And then more specifically in this dealing range from this high to this low, you have your original consolidation here, you have equal highs or an external high right there. And then this is where the lows got nuked. So you could start reclaiming this external low, and that would be the beginning of your distribution phase. So I don't think we're there yet. I think there's a huge inefficiency here we got to draw back into before pricing up again. But again, it's leaving these wicks open to move up even more. Now in this range, you have the exact same fractal from the weekly. You have a 3 tap, 1, 2, 3. All those stops got accumulated at the lows. So I really like the synchronicity of the chart between the weekly and daily. It's suggesting this has been in deep accumulation within the weekly manipulation zone. So now we'll look at this dealing range on the daily to see where we can enter. In this range, you could see there's a huge daily imbalance right there, and there's a daily order block right there. So I'm pretty much looking at from low to high, trying to enter somewhere below premium. So here's your equilibrium, that's your premium in the green. In the gray, you're in discount, and you can see in discount you have this order block and then this order block, which took out those lows. So the way I'm interpreting the range at this moment is you have your first shift right above here. So this is your daily shift in market structure. This was your raid of these lows. So the two things I'm seeing, or two opportunities to go long here, I'm seeing are going to be essentially inside this order block and a reclaim of these lows. So I'm going to start hunting right here in that daily order block. And if this alert triggers and I see it basing on the 15-minute time frame, creating some sort of microstructure, I'll start laddering in with the idea that I'll still have an opportunity to potentially buy down here as well on a reclaim. So those are going to be the two entry areas. What I like about this zone right here is you have a bit of a propulsion block. So if I just zoom out on this chart, actually that was the original long. I'm not sure what I did with this, but this is it. Okay. So like I was saying, this is going to be your daily order block right there. And then this was the original daily order block that took out the lows and then shifted structure. So when you have stacked or layered order blocks, this one right on top of this one, so you can see right there, it's basically become a propulsion block, which is basically stacked order blocks in a range. So it's creating a larger and a wider net to catch price if it comes down. I'm expecting a pullback at the very minimum to rebalance this zone. So I'm also aware that people are going to be looking at this order block and this one. So I might get front run, which is why I'm going to set another alert slightly above, just so I don't get front run and I don't miss the move. But yeah, this general range is what I'm looking for. If you zoom out one more time and you really scale out, you could see how high this could potentially go. So if you ignore this, listing launch scam wick that went up, I don't know, like $25, ignore that. Your first real pivot or all-time high, I would say, is 680. So from down here, that's a 3,200% move. So this is kind of in line with meme coins, right? I'm not saying it'll go there, especially with all the new shiny gems in DeFi. Like if you can invest in Eigenlayer or Rocket Pool or any of the newer ones that people are buzzing about, that's probably going to be higher EV. And you could expect, your expectancy is probably higher on newer protocols anyway. But it doesn't have to do a 3,200% move for it to be a nice move on a spot long, right? Just to this high, 51 cents, it's a 100% move. And then if you go a little bit more zoomed out, there's a weekly internal imbalance up here. That's basically a 6x up to there, right? So it's not a shabby move. And technically I'm looking for these highs to get nuked on the daily, and then maybe this liquidity void to get rebalanced. So all in all, this could go easily 6x. It could go up 10x up to here, and into that liquidity void, it's a 14x. So it doesn't have to be 3,200% move. But for me, this looks like a bottom, and I'm just looking to go long at some point. In the meantime, I'm looking for a short. These are the two options I'm looking for. You have basically this broadening right-angled wedge over here. So basically you have higher highs broadening the wedge, and then you have these equal lows in the range. Basically these, this one, and this one. So if you just take another ray, you could see that's pretty much going to define the bottom of your broadening wedge. In the zone, I feel like right here, they basically front ran this level that swept the highs. So these equal highs got swept here. I'm just waiting to see if they pull back into that range. On the 15-minute, you have these equal highs, which to me looks like a pretty good target considering they protected these lows. So they didn't take them out yet, meaning if it comes up one more time, I'm looking for a rate of this liquidity pool and then underside retest to go short. The short is going to be TP1 into this liquidity arc, and there's a 50-minute order block in there. The second one is going to be a pretty clean move down through that inefficiency right here. So I'm looking to take second TP inside of this 12-hour order block right here. And I say it's 12-hour order block because you could see the displacement that came out of it and then close well above the previous high. So this 12-hour order block, that's going to be TP2. TP3 is just in case they decide to go a little bit lower and nuke the internal lows here, and the order block stops right there. So maybe one more push down. With the ultimate long, again, it's going to be, I'll start hunting here. So if I close the full short here, I'll be looking to see it base. If it doesn't base there, I'm waiting for a deeper long into this daily order block and this reclaim. And then I'm basically going to DCA in over there. Here I'll be marketing in if I see 15-minute structure developing like this. Then I'll start going long over here, market in. Anyway, that's Curve Finance. I think this one's been completely destroyed in the last leg down, and it pretty much has the most upside. I always look for asymmetric trades where you have very low risk, but the upside is tremendous, and I think this one definitely qualifies. All right, boys, enjoy your Sunday. Cheers.